Hello everybody, welcome to this live trading by Dubai Trading Academy and Paris Trading Academy. Today we are going to try to live trade the Nasdaq, the Nasdaq 100 future. Okay. This live is for educational purpose only and should not be considered as financial advice. Futures trading is dangerous and risky and comports risk for your capital, and it should be treated accordingly. Trade at your own risk. Like our previous live, today we are going to start with some news review. With some news review where we review the economic news of the day and its implication for financial market. Then we are going to look at the economic calendar and different asset class. Then afterward we'll do some Q&A, either for beginners trader and for more advanced trader. While we are doing this, we're going to look at the market and see if we can take some trade. If we see any trading opportunity, we might take them, but we're gonna see. Then also, to finish, I have recorded one of my trades this morning, so we're gonna look at it together, and I'm gonna try to explain my thought process while taking this trade. So if we look at the news review, today the European Central Bank had a meeting and published its decision towards their interest rate. So basically they kept their interest rate at the same level as their previous meeting. So yeah, it also said that this hike was like the previous hike was probably one of the last. Also during the night there was a Russian nuclear test, so that's kind of a pretty bad news for the world in general. So I'm not even gonna talk about the economic implication of this news, because normally you should be able to interpret this news as you want. But basically they shot 3 missiles in the country. They launched several missiles in the country and in Russia, and so that's a few of the things that happened today during the night. Then also we had the US House Speaker that got installed. So basically this morning US House of Representatives Republican United are under new Speaker Mike Johnson, and therefore they were able to return to the spending bill that was urgently needed to avoid shutdown and respond to the crisis overseas, so both Ukrainian one and Israel one. So that's good news also for the market, even though it's going to mean more US debt. Then if we look at the economic calendar, I'm gonna bring it for you here. So we can see yesterday we had new building permits that were lower than expected by worse than expected, and a decrease in building permit that was slightly worse than expected, but we had an improvement in new home sales by 12.3%, so that's kind of important. And we also had an increase in crude oil inventory and 5 years note auction that was higher than expected. It's logical with the new the higher interest rate by the Fed. And we had the 5-year note auction. So if we look now at the 5-year note in the US, we can see that the yield is slightly lower than how it was actioned yesterday, but that's basically because they sold previous bond and bought the new one, so therefore they increased the price of the new ones, which reduced its yield and decreased and sold the previous bond, which then reduced their yield. So, and we had Powell, like Fed Chair Powell that speak as well as Christine Lagarde, but they were talking on different topics that were irrelevant for us at the moment. Yeah, so sorry, I'm looking at the market because even though Russia tried a nuclear bomb, I am thinking today the market might go up, and I'm gonna explain my reasoning afterward. But my plan was to take it somewhere around here, but it's okay. In the worst case, I will show you this morning trade. Then, if we look at the economic calendar today, we can see then the the European Central Bank monetary policy, so to maintain their interest rate. We had the durable good and core durable good order that were better than expected, as well as the GDP and the good trade balance that all went out better than expected, which means that there was a big improvement in GDP, so in economic activity in the US for the Q3. On the other hand, we see that the jobless claim was higher than expected, which is a sign that maybe the labor market is gonna slow down a little bit, which is pretty good for the economy. So now we have the European press conference, which is about to finish. And as a reminder, you can generally find them on YouTube. European Central Bank, you see, you go to European Central Bank, live, and of course it doesn't appear, so they must have finished it right now. It must be just finished and the link will appear later. Anyway. So also tonight we have the 7-year note auction, which is not as important as the 5 or the 10 years, but it's still important data. And we also have the Fed balance sheet, which is gonna give us an insight on quantitative easing and quantitative tightening. So that's things we wanna watch. If we look at tomorrow, we've got PCE for inflation. So it's an indicator of inflation, as well Michigan, University of Michigan inflation expectation and consumer expectation. So that's going to be important statistic to look at. We're going to see tomorrow during our live in French what are going to be the consequences of those. Then let's look at how the market behaved yesterday and today. So we can see since the open, like first that most of the US bonds have decreased, even though yesterday they were increasing. So I think I've got the 10-year. No, I don't have the 10-year. But if we look at 1 week, we can see that yesterday the bond rose almost at 5% and even reached above 5% on 23 on Tuesday. So that's quite important. We can see like it was a sharp decrease at the open, which means people bought the bond. So that would be one of the first maybe bullish signal we might see today, even though the market seems to be continuing its free fall, which is kind of expectable, but at the same time a bit surprising. So that's why I'm kind of not that confident about taking trade today because I see multiple signs from for both market move, and therefore I'm not that confident in the trade. And if I don't if I'm not really able to anticipate market movement, I'm not gonna enter any trade. Then, so we started with the 10-year yield, but let's first start with gold, which I had opened earlier, but it reached 2000 today, which is a pretty strong resistance level. So we are gonna see if it's able to keep it, to hold it and not fall down. Then the oil is going down today because yesterday of the inventory yesterday, but also if you look on it's lower compared to the day Hamas invaded Israel, but it's still pretty high if we look in the grand scheme of things. Like for the year, it's still like clearly above most of the previous yearly price. But on a monthly scale, we can see that it's it started to go down. So hopefully it's gonna continue going down because it's good for the economy and for the consumer. So then, if we look at currencies, we can see that the US Euro USD is going. Let me see. I can show it to you there. It's gonna be easier. So it's down for the last 3 days, but it still reached a peak on Wednesday of almost 1.07, which is one of its highest levels since September. And we can see that we slowly stopped our downward trend, and we are started on a new upward one. So maybe just a correction, but it looked like it might be continuing to go up. So that's pretty good also for us. If we look at bonds, especially US one, well, we can see they have been going down at the moment since the open in the US, but in the overall grand scheme of things, they are on a clear upward trend. Like the bond yield are on a clear upward trend for let's see, on the 1 year, for at least this summer. So that's a pretty actually bearish signal, even though prices are going down. On top of that, if we look at the 10-year minus the 2 years bond like constant maturity yield, we can see that we are here now currently, somewhere here. We can see that we are up, and now we go this way. We can see that we are now that this is negative, which means that it's more expensive to loan money for 2 years, to borrow money for 2 years than it is for 10 years. If we look at this curve, we can see every time this was negative was before a big just before economic crisis. We've got the 90, which is like a crisis for a oil crisis. 87, 81, it's a sign of basically it's a sign of recession, and it has always before each recession the yield curve was inverted, and we can see it like that, and this is how it displays. We see 2009 was a short period of time where it was inverted. We see 2006 and 2005 it was inverted, same as 2000, 90, 81, 80. So basically this is a sign of recession. It tells us there's going to be a recession, but it doesn't say to us when. If we look in 2008 here, in 2006 it's inverted, but still it's still needed. Like the crisis was not about before 3 years later. So it's kind of hard, like it's a sign that it's coming, but it doesn't say when. So you shouldn't be, okay, the yield curve is inverted, market's gonna go down. It doesn't work like that. Then if we look at the equity market, so like this is most of the index we're following, and we can first we know that yesterday was some results. So today, actually 2 days before, was Alphabet result, which is like basically the mother company of Google, and we can see that basically it fell drastically. I think it's around like 12%. Yeah, 12% in like 2 days, because basically they missed their result in the cloud department, and market took that as a sign that their business was weaker than anticipated. On the other hand, Microsoft succeeded, like beat its earning expectation, and therefore it had a huge increase in prices. Like we can see, it was like trading 4% overnight, with a 4% increase overnight. So that's kind of a big increase for an overnight one, especially when at the same time Google is losing 9%. Then today we had the Facebook result, and even though they beat their expected earning, like they're going down mostly because of how do we say it, of the interest rate and the global market trend. And since huge gross capitalization tend to be dependent on interest rate, like high interest rate are not favorable for those companies. Also today, like in the next coming earnings, this night there's Amazon. So that's kind of an important one to follow, especially if you're trading Nasdaq, of course. Like just to remind you, like this is the all the S&Ps, all the S&P company, as well as with the size market cap related to the market cap. And we can see that Amazon, Google, Meta, Microsoft, and Apple and Nvidia are taking a huge part of that. So it's quite important to follow their results, of course, like in their earning report, to see how it's going, because otherwise it tends to be slightly like it's quite important to follow that. So basically that's no, so that's for the equity, like individual equity. But if we look in the overall, we can see that basically almost every index are in the red, especially if you look at Nasdaq 100. Yesterday it lost 2.6%, which is kind of huge if you look more in detail, like here. No, that's yes, when? Oh yes, that's yesterday. So yesterday at the close it was at like it was at 14,700 something, 745, and yesterday when it closed at 14,300, which is like a huge fall. If we look at the Nasdaq on this market, if we had sell it at the open and bought it back at close, it would have been $7,000, which is a huge move for the market, for the market, which basically it's extremely rare. It's something like less than 20% opportunity to get it. This is going away. It's kind of done. Tac. And if we look at the VIX, which is always an indicator of fear, we can see that the VIX is still pretty high. It's around 20, 21, while if we look lately, it's been more around 13, 14, 12, like you see between the highest 17 and now and 12, and now it's around 20, so it's quite high. It's quite high, yeah. So now I'm gonna do like some Q&A depending on the answering the question people have asked us. So if you have any question, do not hesitate to either ask them in the chat or ask them by private message. We see those messages and we tend to we try to answer most of them. Otherwise, sorry about that. So the first question, it's quite an easy one, but it's I've seen many people and many of our interns that actually don't really get that point in the beginning. So what is trading? So basically trading is buying and selling financial assets with the goal of making a profit. Yeah, I've missed my trade. Anyway. With the goal of making a profit. So yeah, it's buying and selling financial product on financial market in order to generate profit. To generate profit. So basically, you want to buy low and sell high, or sell high and buy low. So that's the basic one. One of the questions that come up the most is: do you recommend any prop firm to work with? In my opinion, if you can avoid it, try to avoid it. Avoid it, because basically around 99% of prop firm accounts are losing money. So that's quite a lot, a huge amount of people that are losing money in prop firm. People trading with their own money on a brokerage account don't lose that much. So really, trying a prop firm should be something like a last resort. And before thinking about which prop firm should you trade with, what do you think about that? You should think about making sure that you are a profitable trader, because most of the time, people that come with us asking us questions with prop firm don't win money on demo account, don't win money with their own brokerage account, but already want to try to go in prop firm to work with prop firm, even though it's one of the hardest way to make money while trading. So really, if the only prop firm might be interested thing, if you are a profitable trader. Yeah, if you are a profitable trader and you want to gain access to more capital, but still, I would recommend personally to be using to generate capital through trading instead of using a prop firm. And also, if you can withdraw your capital from a prop firm, withdraw it. Otherwise, you risk to lose access to it. The MyForexFan case is a very good example of all the risks that are associated with prop firm, and why I'm a bit skeptical, and I don't really want to recommend any prop firm to you if I don't know they work, if I haven't worked with them, if I'm not familiar with the way they're working. One of the first things that was wrong with MyForexFan is that they did something that's called B-booking. So what's B-booking? To understand that, you need to understand there's two ways to do brokerage. Either you put the order of the customer on the market, and therefore you get paid by commission and you win money by the broker win money by commission, or the other way is bebooking, which when it's it's bebooking. Bebooking consists of basically when you're taking a position, your broker takes the opposite position. The problem with that is that they could be enticed to basically do everything they can to make you lose money. And if they are malhonest, like my forex fund, they can change the price in order to go hit stop loss, make sure that the market doesn't reach take profit, stuff like that. They can increase the spread in order to make you not profitable. They can modify your order so that you think you wanted to buy at this price, but they're gonna make you buy at this price, for example. And the goal is for that is to basically make you lose money and therefore win money. And the last risk, and that basically are all the things that happened, that were happening inside my forex fund, is that all the people that had fund with my forex fund got basically their fund blocked by CFTC, because CFTC said this was a fraud, and before anyone before they can settle everything and figure out what's happening there, all funds need to be blocked. Therefore, if you had your funds in my forex fund, now you would have lost everything, at least lost access to everything, at least for a while. Therefore, you should always be careful and choose very wisely your prop firm. And the thing is, my forex fund was a very notorious prop firm. There were a lot of customers, and therefore the simple fact that this turned out to be a fraud should be like extremely worrying if you want to work with a prop firm. Okay, so another question that come up a lot is what is a broker and how do I choose it? So basically, a broker is an intermediary that will pass the order on the market for you. There's several ways, there's several points you need to check before choosing your broker. The first point is which asset they're working with. For example, if you want to trade future, you need to select brokers that work with future. If you want to trade forex, you need to find the broker that works with forex. If you want to trade equity, you need to find an equity broker, etc. Also, the second point that's important, almost more than the first one, is where are they registered and regulated? Regulation is meant to protect you from fraud and from abuse. So you want a country that has strong regulation. We can see like US, Europe, Western Europe, Japan. You want to avoid as much as possible tax havens, such as Malta, British Virgin Islands, Bahamas, Panama, those stuff. That doesn't mean they're necessarily wrong, like they're necessarily gonna fraud, but the regulation's not gonna be necessarily in your favor. Therefore, it facilitates fraud, even though it isn't guaranteed this is fraud. But if you wanna be safe, the best way is to avoid the tax havens. Then, another point that's quite important is reputation, and also if they are registered on the exchange. If you look, for example, on the CME website, CME website broker. you can see that basically they have a directory of all the brokers who support CME's market. So if if your broker is on this list, it's generally a broker that's regulated, and that's that should be at least honest and of good quality. Like there's the list is pretty long. I think there's something like 360 brokers, or maybe more. There are 322 brokers. Therefore, you need if you want to trade future on the CME's market, you just pick one of the brokers that is on this website. And if you want, then you choose you look at them and you pick the one that suits you. We at Paris and Dubai Trading Academy, we work with Street Future for several reasons, but mostly it's because we know them. We've been used to working with them. They know us, and they help us and their work, and they like working with us. Their customer services is also in French, so that's quite helpful for us French people, or French native French speaker. Afterwards, you're looking at the reputation, the quality of service, also as well as fund security. Like I said, in tax haven, where you don't need to do basic accounting, it tends to be harder to have fund security than if you're looking at the USA or at France, for example, or Netherlands, Germany, UK, stuff like that. And then lastly, you need to look at commission. The lower the better, but to some at a certain limit, because if they're too low, there might be it means they're making money from another way. So there might be a booking. They might be selling your trade to a dark pool. There might be several reasons, and therefore, you should always remember that if it's free, you're the product. So that's not necessarily a really good sign. Then, another question we have quite a lot is, how do you know how the market is going to move? Well, there are several indications that tell me how the market is going to move. And today I actually missed some, so that's why I'm not trading, and I've missed the magnificent trade that's coming from here. That's going to go all the way here. But hey, it's life. Things happen. And basically, it starts with a fundamental analysis where we read the news and see what's happening in the economic world and in the trading world. So we are gonna look at earnings, monetary policy, stuff like that. The way the market behaved as well, which is one of the reasons I probably missed I missed it today. And then we do some technical analysis where we're gonna look at the market, draw some support, some resistance, maybe use Fibonacci retracement, stuff like that to figure out, or extension to figure out how the market's gonna move. And then we use the order book and the order flow to confirm or infirm our market analysis and figure out more specifically if we were right and if the market is going to move our way. So one of the questions I get asked quite a lot as well is, I don't know about trading, how do I start? Well, first thing first, you shouldn't start with your own money. It might seem quite dumb like that, but actually, trading is done. I actually get a lot of prospects for trading that don't know anything about trading and that already want to open a brokerage account. You shouldn't do that. This is one of the best way to lose all your money. Like, really, trading is dangerous. If you don't know what to do, what you're supposed to do, you will lose all your capital. So, really, the first thing you need to do is to learn. Either with us or with our competitor, but really, you need to learn. Because if you don't know how trading works, how you do analysis, how you anticipate the market movement, you're gonna get slaughtered. There's actually this thing on Wall Street, and you can hear it on CNBC, Bloomberg, Economic News, and in financial on the trading room. It's bear makes money, bulls make money, and hog gets slaughtered. So which means that if you don't know what you're doing and you're doing you're trading like a hog, you're gonna get slaughtered. And this one tends to verify quite a lot. So really, the first thing you need to do is to get a training. Then, once you've got your training, you should practice with at least demo account. With a demo account, like there's several ways to get demo account. You can do for future, for example, you can do CTS, you can do gain futures demo account, TradeMe demo account. There's lots of ways to get demo account. Might show it to you next live. And once you're profitable enough for quite long, sufficient amount of time on your demo account, you can then think about doing live trading with real money. But if you don't manage to be profitable with demo account, really you shouldn't try trading with real money, live trading with real money, because you're gonna lose everything. And well, if you're gonna lose everything, you're gonna be like discouraged. You're gonna think the market is rigged, that Wall Street is out there to get you, and stuff like that. So yeah, I think I've missed the move for the morning session, the US morning session. That would have been basically somewhere here. But it's okay, because like I said at the beginning of this live, I had a trade this morning on the DAX, so on the DAX future. So I'm gonna show it to you and try to explain what was my thought process. So it's basically, I took my position at the open, and my analysis was that it was gonna continue to go down, because of the news I read while I was doing my fundamental analysis. Like mostly it was the news where like it's was of the nuclear test plus and everything. So I was pretty sure it was gonna go down at the open. So I took my trade. Up, I'm gonna cut it down the sound, because it's in French, and it's not really gonna help you a lot. So we see at the open, like I thought the market like kind of collapsed, but that wasn't enough on this. Like my goal was actually quite lower. As you can see, I'm gonna put my take profit. So I wanted to put my take profit somewhere around 55, 50, yeah, somewhere like that, somewhere here, because I thought that it was gonna break the previous low that it just did, that was at 760. So that's how I started. And then once I was in position, I was looking at order block. So where were the big order blocks? So there was one big here. There was also, so that's what I'm showing, and there was not a lot of big order block on the top, but even though there was a big order block on the bottom, it didn't manage to push by the market. It slowed it down a bit, but the market was still pushing downward, so it showed me that there was like quite a big selling pressure. Therefore, I was quite confident that the market was gonna continue to go down. So I was looking and was checking where is it like where are the order block coming like are the order block, how the market is behaving around those order block, are they is it pushing the market back really high, is it instead pushing it a little bit but then it continued to go how to say it to go down, and like we see it slowed it a bit around like this level, but it was still going down pretty fast. So at the moment I'm $950 in profit on this trade, and we can see that there's some new order block that appeared also on top of the order, like above the price, and we're pushing the market down. So I wanted to show you on the graph. Basically, yeah, my goal was to buy it to close my position just below the previous low. So I was still looking at order blocks. There's a few that were coming in. There was not a lot above, but they were still pushing the market really high, and we can see that all the order block were getting swallowed by the market. So I was still pretty confident in my trade at this moment, and I didn't really want to close it. But now I saw like that we were reaching like a level there had been previous exchange, even though it was before the bell and the opening. So I started to be a bit more cautious, and I think I pretty soon moved my buy stop. So my goal was to go out here, but like I saw that the market here was hesitating quite a lot, and started to pull back. So it's probably somewhere around here. Yeah, and there was some big order block around here. So I think I started like to I put my stop loss. Put my stop loss lower, just in order to secure some profit, and make sure that the market didn't turn around on me. So I put my stop loss and I removed the previous one, and then I waited I tried to see if the market was gonna come up or come back down, but it stayed it spent a lot of time inside that range, which means that the market was balanced, and I wasn't necessarily a huge fan of that. And see, there was a new order block that came in here, so I got kind of spooked by it, even though there was some order block that came on top, and therefore I think I closed I closed it later around this level at 1475, but I closed it later at this level, but at this point I wasn't. I was more instead expecting it to reach my take profit more than my stop loss. To be completely fair with you, and that would have been my hope. I would have made more profit. Like if you see, my profit was way better if it had to reach my take profit, and not if I hadn't closed it myself. But since I didn't know the future, I put my take profit slow stop loss low, closer because I would have been satisfied with being hit on my stop loss. Put it higher because above the order block because I was kind of annoyed to see it like my order being blocked, and I was then the order block moved like the all black you see there's a big order block here of 4 order or of 425 order, which is pretty big for the DAX, and it actually pushed back the market, and I think it went to hit my stop loss a little bit later. And so yeah, like I said, I spent it was getting really close to my take profit, but didn't want to hit it, so it started to be quite annoying for me. Like once again, it stopped just 2 ticks above, and at this point I was quite afraid that the market was gonna turn around. And so I think I was starting to consider to flatten, and I flattened. Then I closed it, and therefore it was in total. I think like I said, 15. Like you can see on the video, but basically it was 15, 15.25, so 86, 83, 86 to 63. No, 73, something like that. Well, that will be all for me today, I think. Let's check how the market moved since for the last 10 minutes, and we see it's stabilized at around here. It's starting to do a new bell, so we are glad we haven't entered the trade, even though if we wait a little bit, we know it will most likely go reach somewhere here. It's not necessarily like we've already made some money this morning. We don't necessarily need to force trade today, and this would probably be a very bad trade. Looking at how the market behaves since. So well, that's gonna be all for me. Thanks for your time. Thanks for being here. Don't hesitate to like, subscribe, hit the bell, and ask any question. Send us any message or any question. You can find all the contact information on top of the screen. So please feel free. We will be glad to discuss with you.